If you're still picking individual stocks in 2025, you are not investing. You're gambling. The stock market is a complex and unpredictable beast, and trying to outsmart it by picking individual stocks is a fool's errand. You might as well take all your money, put it in a big Ziploc bag, and light it on fire. The odds of you picking the right stock at the right time are slim to none. At least that way, you'd be skipping the middleman. The financial industry thrives on people believing they can beat the market, but the truth is, most people end up losing money. I know, some of you are thinking, but if I just picked Nvidia, I'd be rich. Sure, hindsight is 20/20ths, and it's easy to look back and see the winners. But for every Nvidia, there are countless other stocks that have tanked. That's what they all say. Until they pick the wrong stock and lose everything. The emotional roller coaster of watching your investments plummet is not worth the potential gains. Look, I get it. Everyone wants to find that one stock that's going to skyrocket and make them a millionaire overnight. The allure of quick riches is hard to resist, but it's a dangerous game to play. But the reality is, picking individual stocks is like trying to time the market. It's incredibly difficult, even for professionals. Even seasoned investors with years of experience and access to vast amounts of data struggle to consistently pick winners. Today, I'm going to break down 5 brutal reasons why picking stocks is one of the worst things you can do with your money, and more importantly, what you should do instead to build long-term sustainable wealth. Diversification, low-cost index funds, and a disciplined investment strategy are the keys to financial success. Let's get real about investing and ditch the get-rich-quick mentality. It's time to focus on strategies that have been proven to work over the long haul. Stay tuned as we dive into the details and help you make smarter investment choices. When I was 15, I thought I was a genius. I had this unshakable confidence that I could conquer the world of finance. I mean, how hard could it be? I was acing my math classes, and I figured that was all I needed to outsmart the stock market. I opened a brokerage account and started researching stocks, diving into financial news and reading up on market trends. I spent hours poring over charts and graphs, convinced that I could spot the next big thing before anyone else. Thinking I could outsmart Wall Street, I imagined myself as a young prodigy, making trades that would leave seasoned investors in awe. The thrill of the game was intoxicating. My method? Look for stocks that went up and down a lot because higher risk equals higher reward, right? I thought volatility was my friend, a sign of potential profit. I was drawn to the excitement of big swings, thinking I could ride the waves to success. Spoiler alert, I was dead wrong. My brilliant strategy quickly turned into a series of painful lessons. The stocks I picked were more like roller coasters, and I was on a wild ride that ended in disappointment. I invested in 3 companies, JDS Uniphase, Excite, and Amazon. At the time, they all seemed like promising bets. They were in the news, they had buzz, and I was sure they were on the brink of explosive growth. 2 of them went to zero, only Amazon survived. JDS Uniphase and Excite crashed and burned, taking my hard-earned money with them. It was a harsh wake-up call, but did I have some special investing insight? Nope. It was pure luck that Amazon thrived. I had no real understanding of the companies I was investing in or the markets they operated in. It was pure luck. And most people don't get lucky. The reality is the stock market is unpredictable, and betting on individual stocks is a gamble. Think about it. For every Amazon, there are hundreds of companies that never make it. Companies that start with a bang but fizzle out, leaving investors with nothing but regrets. Companies that seemed promising, that people poured their life savings into, only to see them crash and burn. It's a heartbreaking reality that many investors face. Finding the next Amazon is like finding a needle in a haystack, except you don't even know what a needle looks like. The odds are overwhelmingly against you, and the stakes are incredibly high. You're essentially gambling with your financial future. It's like walking into a casino and betting your life savings on a single roll of the dice. The thrill might be there, but the risk is enormous. The odds are stacked against you. The stock market is a complex system influenced by countless factors, many of which are beyond your control or understanding. 90% of retail traders lose money in the stock market. That's a staggering statistic that should make anyone think twice before diving in. Let that sink in for a second. 90%. The vast majority of people who try to beat the market end up losing. It's a sobering thought. Do you really think you're smarter than 90% of investors? It's a humbling question, and one that should make you reconsider your approach. Instead of trying to pick the next hot stock, focus on a strategy that has a proven track record of success, investing in low-cost index funds. These funds offer diversification, lower risk, and have consistently outperformed most individual stock picks over the long term. It's a smarter, safer way to grow your wealth. Let's say by some miracle, you do pick a winner. What happens next? Most people get greedy, they see their investment going up, and they think it's going to last forever. They get emotionally attached to that stock and refuse to sell. but what goes up must come down. And when it does, if you haven't rebalanced your portfolio, you're in for a world of hurt. If you don't rebalance, you end up with an unbalanced portfolio, and when the market turns, you get wiped out. All your eggs are in one basket, and if that basket falls, you're toast. Rebalancing means you sell high, buy low, and stick to a long-term plan. It's about taking some profits off the table when your investments are doing well, and reinvesting them in other areas that might be undervalued. But let's be honest, most people don't even know what rebalancing is, let alone do it. They get caught up in the hype, the fear, and the greed, and they make emotional decisions that end up costing them dearly. They see their investment going up, and they think it's going to last forever. They get emotionally attached to that stock and refuse to sell. But what goes up must come down. And when it does, if you haven't rebalanced your portfolio, you're in for a world of hurt. They get emotionally attached to that stock and refuse to sell, but what goes up must come down. And when it does, if you haven't rebalanced your portfolio, you're in for a world of hurt. But what goes up must come down. And when it does, if you haven't rebalanced your portfolio, you're in for a world of hurt. All your eggs are in one basket, and if that basket falls, you're toast. Rebalancing means you sell high, buy low, and stick to a long-term plan. It's about taking some profits off the table when your investments are doing well and reinvesting them in other areas that might be undervalued. But let's be honest, most people don't even know what rebalancing is, let alone do it. They get caught up in the hype, the fear, and the greed, and they make emotional decisions that end up costing them dearly. Chapter 3. Be honest. When the market crashes, do you stay calm and rational, or do you panic and sell everything? Do you let your emotions dictate your investment decisions? The average investor buys high and sells low because they invest based on emotions, not logic. They see a stock going up, they get caught up in the FOMO, fear of missing out, and they buy at the worst possible time. Then, when the market inevitably corrects itself, they panic and sell at a loss. This is why index fund investors win. They don't chase hype, they don't panic sell. They stick to a strategy that works over decades, not days. They understand that the market goes up and down in the short term, but over the long term, it has always trended upwards. Index fund investing is boring. It's not glamorous, but it works. It takes the emotion out of investing and allows you to build wealth steadily and consistently over time. Chapter 4. You know what stock picking actually takes? Hours of research, financial modeling, tracking earnings, and listening to company calls. It's a full-time job, and even then, there's no guarantee of success. Meanwhile, index fund investors are living their lives, traveling, and spending time with family. They're not glued to their computer screens obsessing over every market fluctuation. They're out there enjoying the fruits of their labor. You want financial freedom? Invest in low-cost index funds, automate your investing, and move on with your life. Spend your time doing things you enjoy, not stressing over the stock market. Time is your most valuable asset. Don't waste it trying to beat the market when you can simply own it. Chapter 5. Here's the final and biggest reason. Even the pros can't beat the market. 80% of hedge fund managers who have all the data, tools, and experience fail to beat the S&P 500 over the long run. Think about that for a second. These are people who do this for a living, who have access to the best research and resources, and they still can't consistently outperform the market. So if the experts can't do it, what makes you think you can? Let's be real, you're not going to outtrade a Wall Street algorithm while scrolling Twitter on your lunch break. Warren Buffett, one of the greatest investors of all time, has famously said, "The best investment strategy for most people is a low-cost index fund." Buffett himself recommends index funds. So instead of trying to outsmart the market, just own the entire market. So here's what you need to do instead of stock picking. Invest in a simple, diversified, low-cost index fund like VOO or VTI. Automate your contributions and stop obsessing over the market. That's it. No hype, no stress, just real wealth building over time. It's not sexy, but it works. If you want to learn how to invest the right way, hit subscribe and turn on notifications. I drop new videos every week on investing, money psychology, and building a rich life.